Hi, it's me again, Leslie. Abdul Karim Abdullah also. Today I would like to talk a little more about Islamic finance, in particular about Islamic financing of consumer items like furniture, handphones, or maybe cars and houses. At the moment, if you go to an Islamic bank and want to buy a house, what the bank will do is will buy the house first. Then it will add on what it calls a profit margin, and then it will resell you the house at a higher price than the market price, and you will be paying the installment payments, which will be equal to the total amount you pay for the house divided by the total number of repayments. But there's another way to do this kind of financing, and we can see examples of this, for instance, in the way IKEA sells its furniture, or in fact Apple Computer sells their iPhones. What they do is they notice first of all that they are not banks, but they are manufacturers, and they are selling their products directly to consumers on credit. So when you pay a certain price for a phone or a piece of furniture, their profit margin is already inside the price of this item. They do not have to add another profit margin like the banks. That's why if you buy the product directly from them, it will be cheaper than if you bought it with a bank loan. So in this case, in the case of furniture bought from IKEA, or Apple bought from, an iPhone bought from Apple, your price for the product will be, your monthly payment will equal to the price of the product, a piece of furniture or a phone, divided by the total number of repayments. Now, this method of financing, which they advertise on premises, by the way, is called the zero interest financing. And that, in fact, is a real Islamic financing, even though few people are referring to it that way. So now I would suggest that perhaps the laws could be amended in such a way, if this is required, as to allow developers or construction companies to sell directly to customers on credit, with the proviso that the sale price be equal to or almost equal to the credit price, and that the monthly payment be calculated by taking the total price of the house and dividing it by the total number of repayments. So that, for instance, if you are buying a house for an X number of dollars and you are buying it over a 20-year period, then you would be paying every month an amount equal to the X number of dollars divided by 20 years, and then divided again by 12. That will give you the monthly payment. So now this way of buying a house will be considerably cheaper for you than if you go to the bank and get a loan to buy the house, because the bank will add its own so-called profit margin to the price of the house. This would not happen in cases where the developer would be selling the house directly to the householders without the middleman, the bank. Let me give you a couple of examples. I have a friend here who bought a house on credit with the help of a bank, and the cash price of the house was 400,000 Malaysian ringgit, but the credit price was actually 700,000. So the bank's profit on this house was almost as much as the sale price of the house, which is quite substantial, because normally the profit margin of construction companies is in the neighborhood of, say, 10% in Asia, and maybe as low as 5% in Western countries. Then another example, I know someone in Canada who bought a house in British Columbia whose cash price was $500,000, but whose credit price was $1.5 million. In other words, the interest on this house alone was twice as much as the price of the house. Now imagine how happy he would be if he could buy the same house directly from a developer without having to pay $1 million more to the bank. His monthly payments would be exactly equal to 1/3 of what he is currently paying, because instead of having to pay $1.5 million, he would only have to pay $500,000. And by the way, This loan was what we call an intergenerational loan because the repayment period was actually 40 years. It looks like his children will have to continue to paying for that house. So once again, just to sum up, I think that the direct selling by manufacturers, as is done already by Apple and IKEA, should be extended to the sales of cars and houses. And in this way, consumers will benefit from lower prices, and this will be a boost to the economy, while the producers will benefit from increased sales. The banks will be kind of left out in the cold, but what they can do is actually reinvent themselves and enter the real sector and begin to compete with the very industries or some other industries for whom now currently they are providing financial help in terms of helping to sell their products. So yes, the banks would be affected because who will go to a bank if you have to pay a price which is much higher than a price you would pay directly to a developer? There wouldn't be too many people interested in bank loans. So I would suggest that the problem of the banks could be resolved by encouraging them to enter the real sector where real value is added onto products and services and where real products and services are manufactured. So I think that's all for today. I hope you enjoyed a little talk, and I will see you next time.